I'm Bruno Poulsen, a Managing Director of Morgan Stanley Investment Management, and this is Global Quality, a portfolio of 35 to 55 of the highest quality stocks in the world, resilient, well-managed companies. Global Quality was launched in 2013 by the International Equity Team, and today has clients around the world and over $4 billion in assets under management. Zenith recommended, we're delighted to offer Global Quality to Australian investors. This portfolio is defined by its quality, engagement, and resilience. High-quality companies are generally companies with rare intangibles, such as brands, licenses, or networks that enable pricing power. We're really disciplined about focusing only on investments with sustainable high returns on operating capital, high gross margins, low capital intensity, solid free cash flow generation, and a predictable top line. In our view, high quality or capable management are excellent allocators of capital and have sound governance structures to protect and grow the business. Nonetheless, even great companies don't make great investments unless the purchase price is reasonable, and that's all the more difficult when market valuations are stretched. Compounders are companies that can grow wealth. They're also companies that can grow their top line and their cash flows simultaneously, which is pretty rare. Where we see reasonably priced companies demonstrating this virtuous circle, sustainable intangible assets, a strong ESG profile, pricing power, recurring revenues, low capital intensities, strong free cash flows, and reinvestment in the business to keep the wheel turning, we invest. We've engaged with company management for over 20 years. The key benefit of our experience and our asset size is the access to this company management. We vote our proxies. We raise material issues with senior executives as well as the sustainability officers of companies, and we vote against management when we must. We've engaged directly with household and personal care and beverage companies on plastic waste, with healthcare companies on product safety, and with software and IT services companies on a range of data issues and privacy security. Our pay X-ray methodology allows us to compare executive pay schemes across the portfolio and to take a firmer line where we see incentives not aligned with shareholders. About 80% of the portfolio is invested in just three key sectors: software and services within IT, healthcare, and consumer staples. What we don't own is just as important. There's no energy, no banks, no real estate, no materials, utilities, or telecoms. We avoid capital-intensive, low return on capital industries with no pricing power. Software and IT companies that robustly navigate the crowd and has subscription revenues, high switching costs, or help others with digital transformation are interesting to us. And so are medtech companies focused on consumables such as needles or syringes, or animal health companies with predictable top line. In staples, where we're picky, digitally oriented beauty companies or diversified hygiene plays are attractive and very investable. It's important for long-term performance to avoid periods of damaging or permanent loss of capital. High-quality companies' predictable earnings come into their own in the toughest times, such as the global financial crisis. To demonstrate this point, from 2007 to 2009, while the forward earnings of the overall index collapsed by 40%, healthcare and consumer staples were barely down, while software earnings were actually up. Global Quality offers a portfolio of enduring franchises more likely to offer superior long-term returns and less likely to disappoint when markets are tough. Global Quality is a high conviction, high active share portfolio that's deliberately different from the benchmark. As portfolio managers, we spend a lot of time worrying about what could go wrong so that you don't have to. We care about absolute risk, the chance of losing money, and we take our questions directly to management. Our proven process has demonstrated that truly active management and a high-quality discipline is the best way to compound wealth over the long term. There are actually only two ways to lose money investing in equities. Either the earnings go away or the multiple goes away. So we select stocks with robust earnings at reasonable valuations, high-quality companies that offer a safe haven in these very uncertain times.